The broadcast is now starting. All attendees are in listen-only mode.
Good evening, everyone. Today a special day because we will be presenting a price action trading for this is advanced system. If you ask me, in my honest opinion, this system is better than the rest we have shown you because it's more advanced. It needs a little bit more of a knowledge, and I think that this is really one of great price action trading systems and methods. You will see, I will present it to you, and you can use it to your advantage, of course. It's basically it's a system which does trend following and ranging market trading. So basically you can trade ranges, you can trade trending markets. It's very dependable of candlesticks. It's a complete price action trading method, and the one that I've been using, I was using it some time ago. It was 4 years ago when I did that, but basically then I switched to, I wanted always to have my own method, my own way of analysis, and that way I have founded Camarilla MACD Trading, which is my proprietary method. But of course, I always present you great systems, great methods, which you really can benefit. This price action trading 4 is, as I see it now, it's the last part of price action trading series. After this one, we will have other trading methods. We will concentrate on range bar trading, Heikin-Ashi candlesticks, and other systems and methods. But price action trading, this is the conclusion of it. If maybe in some future webinars we will go through some again, but now this is definitely it because I have cherry-picked all of those systems for you from most simplistic to most advanced, and this is today most advanced system called price action trading 4. You need to be focused because it's not so easy. And of course, this webinar will be uploaded, and I guess that Admiral will put it on their website because I'm not sure whether you will get a grasp of it after this first session. So it's basically, I can say, most complicated one, but most successful one. And if it need be, maybe in 2 months' time, I can arrange a special session where I will show real-time charts of this price action trading 4 system, and not just real-time charts, but real-time Admiral Markets MT4 stream, where I can maybe explain additional things about it, because it's not so mechanical, it's not so, how can I say, it's not easy, but it's far the best of all systems which I've been presenting you, and probably one of most advanced systems that you have encountered so far if you haven't done any price action method before. So let's start because we have only 1 hour. I'm not sure if this will be enough, but let's start. We have a lot to work today. Before we start, of course, online educational materials are developed by Admiral Markets Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarkets.com, select your country of residence, contact an appropriate entity. With disclaimers explaining all the risks associated with forex market. By proceeding further, you're also accepting whole risk disclosure statement. Final part, Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author. Me, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, and the website in the video is not .co.uk website, but the globally used .com website. Forex is risky business, and this is a personal opinion only, and this webinar is for informational and educational purposes only. Now, what is price action? What is price action? I will do just a quick recap of what price action is, because we don't have so much time to repeat what price action is. You know that, you're following me, you've been following me, and you know that I trade price action. And thank you, I need just to say thank you for great comments concerning yesterday euro-dollar trade, because I had some disputes between me and other traders. They were telling me that the euro-dollar will go up today, and I think that I have been one of rare analysts that I have really analyzed it will go down. If you remember, yesterday I posted the analysis where I said that euro-dollar will go down. That was this analysis from yesterday, although many analysts had told me on Twitter and told me that I will be wrong, that euro will go up today. But, well, you see, well, always, oh, you believe in me. Yeah, I know. Thank you for your support. I like when I can help you, and I really like when we have, you know, we have unique strategies, and we need to be different from other traders and other analysts, and sometimes that differential makes us very successful. So, price action, great methods. What do we use in price action? And parent system presented today, final part, most advanced system, not easy, but it's great. Price action. Quick recap what price action is. Price action is a technical chart pattern analysis which attempts to find order in the sometimes seemingly random movement of price. Swings, high and lows, tests of support resistance, and consolidation are some examples of good price action. The candlestick and price bar are important tools for analyzing price action, since they help traders visualize price movement. Candlestick patterns such as harami, engulfing, cross, pin bars are all examples of visually interpreted price action. Price action is everything that the price does, and just like every other facet of analysis, it's purely subjective. Price action usually uses naked charts, very few indicators or no indicators at all. It's an old school way of trading which has its roots before modern indicators have been implemented. An increase in price action is another way of saying that volatility has increased. Algorithmic trading is not applied to price action trading. Price action trading uses candlestick and patterns a lot. So in price action trading we trade trend lines, support resistance, Fibonacci, breakout, chart patterns, candlestick formations. This is the core of this price action strategy. Now pay attention, this is very important. Don't look other way, because this is not so easy as other systems we made in these prior price action strategy webinars. In this system we will use candlestick patterns, which I will show you here, and also refer to Admiral Markets webinar where I held price action trading. Me and Chris, I think we had that webinar. It was called Advanced Bullish and Advanced Bearish Candlesticks, because those candlestick patterns will be used to trade this system. I also made some recap of those candlesticks here in this PowerPoint presentation, but also use those advanced bullish and advanced candlestick patterns which we had webinar. You remember that we had webinar about advanced bullish and advanced bearish candlestick. I think that Admiral Markets had uploaded the webinar already. Okay, it was, I don't know, maybe it was last year, but sure you need to know that knowledge. Then you need to set 100 period Bollinger Band. Okay, 100 period Bollinger Band, and try to remove the middle line out of it. So in that order you need to have an indicator called bands. So search for bands indicator for MT4. Search for it, and you need to remove the middle line of Bollinger Band. The second part is 200 period Bollinger Band. Then you need to put 100 period SMA, simple moving average. Then 200 period SMA, simple moving average. Then stochastic 1473, or if you know that already, it's called usually 1437 on our MT4. RSI will be used to help you trade. I will show you that later. So put also RSI 60-40 levels, 14 period, okay? And pairs which you can trade: euro, cable, dollar yen, dollar Swissy, dragon, and euro yen. Dragon is British pound sterling yen, okay? We call it a dragon because it's really a dragon. So all of these pairs can be traded through this method. I haven't tested it in other pairs, but I think it can be also done on other pairs too, but you need to test it. So these are indicators which you use. So don't use Bollinger Bands, which is integrated by default on MT4. You need to use Bands indicator. Find it, Google for it, it's easy. Now, bullish candlestick formations, guys, you know about it. These candlestick patterns, you will use these patterns in this system. Piercing line, I won't go through it again. I assume that you already know what those patterns are because we have really repeated it many times. I have personally repeated it so many times, and I think maybe for some traders I'm also a little boring when I repeat these patterns. But you know, piercing line, hammer, morning star, bullish engulfing lines, bullish doji star. Okay, bullish engulfing. Rating means how reliable the pattern is. The more the rating is, the more reliable this pattern is. Okay. Bearish candlestick patterns. Long bearish, Marubozu candle, dark cloud, bearish engulfing, hanging man, evening star, doji star, shooting star. Okay. Mostly these patterns will appear in these systems. In this system. Also, I say refer to advanced bullish and advanced bearish for even more patterns, but mostly these are the main bullish and bearish candlestick patterns which will appear. And you have reversal candlestick formation, long length doji, dragonfly, gravestone, and stars. These are complete reversal candlestick formations. Okay. Now, how we trade this method? First, you need to open weekly chart. When you open a weekly chart, you need to determine the trend. A bullish scenario can be assumed when the first rule, the weekly candle has a higher high and a higher low compared to the week before. Simple, higher high and a higher low. The rule number 2, the weekly candle has a higher high and a lower low compared to the week before. There is also a bullish scenario. And the third rule for bullish scenario, the candle has formed a spike low after a long period of decline, 6 or more weeks. So you need to have, for a bullish scenario to be valid, one of these 3 rules. So the first bullish scenario, the weekly candle has a higher high and or higher low compared to the week before. It's easy. If this week's candle has a higher high and a higher low than the previous week, we have a bullish scenario. This means we want to buy or trade long on the currency going into new week from Sunday afternoon. So this is for determining the trend. The first rule in this system is determine the trend. A higher high means that the candle's highest point for the week is higher than the previous week highest level shown on the candle. The same for a higher low, meaning the lowest point of this week's candle is higher than the lowest point of the previous week's candle. The chart in the next pictures show a candle with a higher high and a higher low than the previous week. Okay? So now you need what we should do. First is to determine the trend. This is the first example. Bullish scenario 1. We have higher highs, higher lows. What are higher highs and higher lows? Simple price action. Higher high, higher low. Higher high, higher low. Higher high, higher low. Okay, like this. So this is the high. Look at this. This is high, this is high, this is high. This is higher high and higher low. This is higher high and higher low. This is higher high and higher low. The most simple explanation. Higher highs and higher lows. On weekly chart, okay? Weekly chart. Because you will be making entries on 1 hour time frame. Okay? So first you determine the trend on weekly chart. What is bullish scenario number 2? We have higher highs but not a higher low. So this is a higher high, but you see we don't have a higher low. This low is a little bit it's a little bit below this previous low. But still it's a bullish trend. So to determine a trend, we need one of these 3 rules. The second rule is this: higher high but not a higher low. So this is a little bit a lower low, but you see it's not too low, and we have still a higher high. Sometimes a candle can have a higher high without having a higher low, or the other way around. An example can be seen in the next chart. The candle pointed out has a higher high than the previous weeks, but also a lower low. So this is also bullish scenario. And bullish scenario 3, the candle has spiked a spike low after a long period of declines, 4 to 8 weeks. So this is slightly more difficult to spot. However, with the practice, you will begin to spot these patterns with ease, guys, with ease, really. Please read up on candlestick charting in the notes in the early part of this book, okay, PPT. Candles labeled doji, hammers, dragonflies, long-legged are all examples of spike low. This is the easiest part. These are the spike lows, okay? Try to find these spikes. You see how it's easy to be spotted. Spikes, 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 spikes. That will be the signal that the trend will turn to the upside. So after this candlestick on weekly chart, we assume that the next week will be bullish. Okay? So these candlesticks are found very close to support. And after they form, we go with long trades on 1 hour time frame. So that is for bullish. The same is for bearish, but the other way around. We have a lower high and a lower low. Okay. Bearish scenario, okay, the first rule, lower high, lower low. The second rule, we have also the same situation as this, spike high. And the third rule, the candle has a higher high and a lower low compared to the week before. The same is for bearish scenarios. Okay? This is lower high, lower low, lower high, lower low. You know that already. Price action formation. Lower low, lower high, lower high, lower low, lower high, lower low. So this is when trend will go down. Okay? This is when trend will go down. Weekly chart for determining the direction you will be placing your hourly entries on. Bearish scenario 2. Candle sometimes can have a lower low but a higher high. Same as with the previous example on bullish scenario 2. Higher, you see on bullish it was higher high and a slightly lower low. This is the opposite. The opposite. We have basically in this example a little bit of higher high, but the low is in place. So the same as for bullish, but the other way around. And bearish scenario 3, again, the candle has formed a spike high after a long period of rallying. So if you see the rally, it was up, 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 and then in this example we have a spike. You need to pay attention to these pins on weekly chart. That means that the next week should go down, and you usually go with short trades. You usually want to place short trades. Okay. Now, we have also additional rule, determining when direction may be wrong. So this is for determining trends. Again, sometimes we may be wrong. How we can filter that? The next thing we need to know is to determine at what price the weekly direction is likely to be wrong and where we must change our view of direction. So again, this is a simple determination. We simply place our reversal level beyond the extremity of the closed week's candlestick. For example, if we are bullish, the reversal level is 10 pips below the lowest point of the closed week candlestick. If we are bearish, the reversal level is 10 pips above the highest point of the closed week candlestick. If it happens, we stop trading in that direction and we may use counter direction. Look at this. This is all bullish, 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 bullish. And this week, let's say this is current week, direction was reversed when price dropped below previous week low. So this is the low. But if the price goes 10, 15 pips below it, then we can say that we won't take long trades. So we can start looking for short opportunities. Not exactly short at the right moment, but observe the price action and try to go with the short trend. Okay? Now, determining entry points. So this was all. I need to repeat it again. This was all for determining trends. After you have determined the trend, you need to trade in trend direction. So let's say that, don't forget about this. Let's say that we will trade longs. So this is weekly chart. You are on Sunday. You are relaxed. You want to trade next week. And you see that the price is, let's say, bullish. So you will take bullish signals from the system. Okay? Now, how to determine entry points? In uptrend, we buy into dips. So when there is uptrend, we buy lower. In downtrend, we sell higher. Okay? That is the main rule. In either case, we need to wait for a pullback. Top of the hour entries, TOTH entries, TOTH entries. No trade position should be considered until the hour rollover. You will notice that about 5 to 10 minutes before the top of the hour or hourly rollover, there is a lot of activity in the market and the price action becomes much more volatile. This is due to traders watching the hour rollover for clues about the next move and traders jostling or battling for advantage before the hourly close to try and sway market sentiment. The same thing happens on both shorter and longer time frames. For example, you may notice the same thing at the end of each 4-hour period or each 15-minute period. So we trade exclusively on 1 hour. We don't trade other time frame. We use weekly for trend direction and 1 hour for placing trades. So traders must wait for the hour to close before taking the trade. This allows the market to close the hour and for hourly candlestick to complete, which will give good information to traders using the system about whether a top or bottom may not be formed. This is so important as this system uses the shape of the hourly candlestick to give us signals to enter the trade once all other rule conditions have been met. So you will use candlestick formations to enter the trade. Okay. Now, the system uses stochastic to determine the overbought or oversold status of the chart. If stochastic is above 80, then we consider the hourly chart to be overbought. If the stochastic is below 20, we consider the hourly chart to be oversold. Do not even consider a trade unless the stochastic is either above 80 for selling or below 20 for buying. Okay? The chart below shows occasions where the stochastic is overbought and where it is oversold. Depending on the direction we have decided to trade in for the week, we will consider entering the market in the vicinity of the arrows. Okay? I will show that later. Now, this is important. The market generally works within bands of statistical probability. Now, pay attention to this and I will show charts. Okay? This is important. In a normal uptrending market, the price tends to range between 200-hour moving average and the top 200-hour Bollinger Band. In a normal downtrending market, the price tends to range between 200-hour moving average and the lower 200-hour Bollinger Band. In a strong uptrending market, the price tends to range between 100-hour moving average and the top 100-hour Bollinger Band, and sometimes the 200 moving average. In a strong downtrending market, the price tends to range between 100-hour moving average and the lower 100-hour Bollinger Band. In a ranging market, the price tends to range between the upper and lower 200-hour Bollinger Band. What does this mean and how can we apply to real trading? So rule number 3 summarized. We don't enter a normal trading market unless the price is touching or beyond 100-hour Bollinger or touching or very close to the 200-hour moving average or touching or beyond the 200-hour Bollinger Band. We don't enter a strong trending market unless the price is touching or beyond 100-hour Bollinger or touching or very close to the 100-hour moving average, and occasionally 200. We don't enter a ranging market unless the price is touching or beyond 100-hour Bollinger or touching or beyond 200-hour Bollinger Band if we trade for Bollinger to Bollinger. So this is normal uptrend. These are Bollinger Bands 200 and 100. This is the red line is 100 SMA, this is 200 SMA, and this is stochastic. So in normal uptrend, you can see, you try to find entries by these rules. Normal, you need to determine whether the trend is normal, strong, or ranging. Also, you can use RSI to determine whether the trend is normal, strong, or ranging. If you determine that the trend is normal, this is normal uptrend, then you will need to place entries at these rules. Price should touch or go beyond 100-hour Bollinger or very close to 200 Bollinger or moving average. So these are the rules. You see how it's important. And also, stochastics needs to be below 20. You don't take trades if the stochastic isn't below 20. Normal downtrend, this is downtrend, and stochastic needs to be above 80, okay? Now, strong uptrend market. This is strong. You see how the price is basically touching 100 SMA, and you see how it's going up, okay? In strong uptrend, it's allowed for stochastic to be just a little bit below 50 level, as in these examples. The best is if stochastic is, of course, below, but when strong uptrend is occurring, yes, these are all hourly charts. I will show you that also on MT4. So just pay attention. This is, of course, hourly charts. You need to pay attention to stochastic. On strong uptrend, it doesn't need to be necessarily below 20. It's the best if it is, but only in this occasion we can break the rule if there is a very strong uptrend. But still, stochastic needs to be below 50. Okay? Strong downtrend and ranging market. Now pay attention to these slides, and I will tell you another rule which you can use instead of watching the chart. You can use RSI also to determine whether the market is in normal, strong, or range mode. Okay? So now the summary is, only consider a trade if and when the price is touching or beyond either the 100 or 200 hour Bollinger Band or touching or near the 100 or 200 hour SMA, depending on the trend strength. Any other position on the chart is considered no man's land and the probabilities are not suited to trading. Now, easier way to determine whether the market is in normal or a strong trend is the use of RSI set on 14 period. The rule is as follows. We are in a normal ranging market when the RSI is between 40 and 60. We are in a strong downtrending market when the we say the strong downtrend market when the RSI is below 40. We are in fast uptrending market when the RSI is above 60. So this is for strong trends, this is for normal trends. So you can use RSI also to determine that, between 40 and 60. So ranging a normal trending market RSI is between 40 and 60. Fast uptrending or strong uptrend market RSI is above 60. Normal trending market RSI between 40 and 60, and strong or fast downtrend market RSI below 40. Okay? RSI is 14, so RSI 14 period. It should be RSI 14 period and add 60 and 40 levels. Okay? Standard RSI, of course, normal RSI indicator, which can be found on MT4 platform. Normal RSI, okay? As shown here, RSI 14, okay? As shown there, okay? Now, pay attention. You can do it like this. You can do it if you're experienced by your naked eye. But sometimes it's easier to use indicator to tell you that. So you can use RSI to determine whether the trend is normal, fast, or strong and ranging. Okay? So first, the rule. You need to determine the trend. So let's say we are bullish. Then you need to determine whether the trend is ranging, normal, or strong. That's easy. And now, entry is made of candlestick patterns. You need to look for a reversal candle to actually take the trade. Use the candlestick shown here and look for webinar advanced bullish and advanced bearish candlestick patterns. Candlestick reversal pattern is the final part of the entry. I will show you the chart now, but before, prior to our showcase of the chart, let me show you this again, because you may be a little lost how you start. Okay, now is the time if you have any questions to ask me before I move on to real charts. If you want to ask me about this, something, maybe some things are not clear, you can ask me now, and I will go through this recap again, and then I'll open a live chart. So the first rule is we need to determine a trend. Okay? The trend is either a bullish or a bearish. There is no other way. So I have shown you the rules for either bullish or a bearish trend. Okay? Once you have done that, you should pay attention to determine when direction may be wrong, as in this example. Now, determining entry points. You use 1 hour chart for entering the trades. Always use the top of the hour candle. So close of the candle, hourly rollover. Because hourly candlestick will show you candlestick patterns which you will use for placing the entry. Pay attention to stochastic, whether it's above 80 or below 20. Above 80 for selling, below 20 for buying. Then you need to determine whether the trend is normal, strong, or range. You can do it by your naked eye, but you can also do it by your naked eye if you follow these rules. So these rules are followed to determine whether the trend is normal, strong, or range, or you can do it by indicator, RSI. So these are RSI settings. 14 period, 40 and 60 levels. Once you have determined that, you move on to candlestick reversal patterns and placing the entry. So let's say that this week this is bearish, right? So this week will be bearish, and we determine that euro dollar will be bearish. So we will be taking bearish entries. Then we move on to 1 hour time frame. So this is it, weekly. And we can say that market is in a normal trending mode for placing short entries. Then the rule is, in a normal or a ranging mode, what we should do is refer to this PPT. The price tends to range between 2-hour moving average and the top 200-hour moving average. So the price needs to touch 100-hour Bollinger or touch 200-hour moving average, or sometimes below 200-hour Bollinger Band. And you want to see a reversal pattern. My chart shows 100 period MA, which is red, you can see it here, and 200, which is blue. In this example, I would wait for the touch of this level, this level, this level, okay, and this level, but for the first reversal candle. So I wait for the first reversal candle here, 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 or here. This was the first reversal candle here. Okay? And usually the target is the next first Bollinger Band, or let's say if you go with a trend, you can use also trailing stop. But usually we go from Bollinger to Bollinger, or from moving average to Bollinger. So this is the reversal pattern. You can see it here. It's a form of dark cloud cover. It's not complete engulfing. It's more of a dark cloud. And you can see that the price drops 100 pips from here. Again, this whole week is bearish. So this whole week is bearish. This is almost a valid touch, but no reversal candle has been spotted. And you see also here, RSI shown it easily. Now let's move to, let's say, cable. First we determine weekly. Let's say this looks bullish, because you see this is basically a piercing line, but just for the sake of example, let's move it here, because this is a bearish week. Okay, so this week we determine the trend to be bearish. Okay, now we move on to hourly chart. Let's find it. It's here. So we want a bearish setup. So first we want to see a reversal candle and a stochastic close touching, or ideally below 80, and the first reversal here, here, or here. The first reversal came here. Shooting star, look at this, shooting star, touch of 200, and down we go. Also we see that the trend is either ranging or normal, so we can follow these rules. Okay? And you see, bang, it went down. This is basically a swing method, swing system, and you need patience for this trades to happen. Okay? Let's on move to this week. I would say this week we can try to find long trends. Sorry. So long trades, reversal patterns close to this level, and we don't have any other. Where would I place the trade here? Hammer, look at this hammer, a long trade, and you see, bang, to the upside. The target is the first SMA or the first Bollinger Band. Look at this, another entry. Let's see, this is normal. Now this is fast, this is normal. Again, here, hammer here, bullish candlestick, Marubozu. Look at this. All trades could have been successful. So also you need to refer to those candlesticks which I showed you prior at the beginning of the webinar. Let's find another pair to try to trade. Aussie, weekly. So this week is bullish because prior week has a higher high and a higher low. So this week has a higher high and a higher low, and let's say we didn't know where this where it will go. So for these candlestick patterns, we assumed because this candle has a higher high and a higher low that next week will be bullish. Let's see. It was bullish, but let's see the entries. Normal mode between 60 and 40. So we need to see a rejection candle here, here, here. So the first candlestick, which I can see, it's like this. Morning star pattern here, and after this candlestick, you see the price went down to touch the next level. Also here, form of a piercing line here. Look at this. And bang to the upside. Okay. I would take also this trade probably. It didn't touch exactly the price, but looked long like doji. So the best is if the price is touched indeed, as in this example. You see here also. So the stochastic ideally should be below 20, but if it's not, it's very close to 20, we still can assume that our trade will be qualified. Okay. Now let's take another pair, GBPN. Weekly chart. Let's say this weekly chart. So let's say for the sake of presentation, so this week, let's say we didn't know this week it was bearish, and we don't know where I put the red line will go. So because of this pattern, this candlestick, we assume that the next week, this week which I have shown, will be bearish. So let's see in these conditions, could we made a successful trade? So we assume that the trend is bearish because we see only this. We saw this pattern, and let's say that we assume that the next week will be bearish. Okay. So let's see. 1 hour. And we wait for the reversal candle here, 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 or here. Reversal candle here. Okay, stochastics, every rule has been done. The market is in a normal mode. So if you taken the trade here, because this is dark cloud cover, you would have got 30 pips. Although it looks like it was a small number of pips, 30 pips is great here, because market then retraced back to this Bollinger Band and 200 period SMA. And here the final part, form of shooting star. Again, we would have been very successful, and here a perfect shooting star. Again, a successful trade to the downside. Okay, you see here shooting star. Now I think I have shown you how this method works. It's really a great method, especially for swing trades, and I really traded it before I have moved to other methods and my proprietary Camarilla MACD. I even traded my practical naked trading prior to Camarilla MACD, but they have some basic knowledge also from this system, because this method shows you how you can trade price action effectively. you're basing your entries on candlesticks on very strong dynamic levels, support and resistance such as Bollinger Bands and SMA, and you can use RSI to determine whether the trend is normal, ranging, or strong. We can use also one more example. Let's use Euro-Yen. So first we open a weekly chart, and let's see this week, last week. What we assumed last week, this is the rule, we assumed that this week, no, this week is neutral, I can say, because it doesn't have any of three valid patterns. But for the sake of the webinar, let's use this week. Because this week may be a little bit harder for us to trade. You see, after this week, we assume that the price will be bullish, that the trend is bullish, okay? Because you see here, we see that this candle made a higher high and a higher low. So this week should have been bullish. It was bearish, but let's see if we could have made some money here. Okay, so we need to place a long trade. So we need to see where the price goes. Here, at this point, it's 100 moving average. Of course, we check whether it's a normal. Can we use 100 in normal? No, we use only in strong uptrend or a strong downtrend. So it's filtered as the trade. So I would see it here first for the price to be longed, okay? Look at this. The price hasn't made any valid candlestick pattern here. So let's see if it can make it down on Bollinger Bands. So here the trend has been bearish because RSI is below 40 and we don't take any long setups. So the price needs to be between 40 and 60 or above 60 for long trades. So let's see if we could have made any trade during that trend. No. But the thing is, once this next week showed up, we assume that this week could have been short, following the rules of the system. And we want to see it where we can short it. This, look at this, above 60, the trend is, what does it say? You refer to this. Strong trending market unless the price is touching or beyond 100-hour Bollinger or very close. Okay, but what does RSI told us also? Let's see the RSI rules. Strong downtrend when the RSI is below 40, normal when RSI between 40 and 60, and fast strong uptrend when RSI is above 60. So in this part, we are again filtered our trade here. This could have been a shooting star here. But look at RSI. Although, yeah, it was a good entry here. We can say that this was a good entry here. It's a shooting star, but at this point, RSI wasn't above 60. It was in a normal mode. Weekly was bearish. Look at this, bearish. Hourly, we can take the trade here. Okay? And what happened is the price went down. Here, another example. After the pullback, look at this. It isn't a perfect example because of stochastics in between, but this is perfect example. Look at this. This is perfect example. It went down. Okay? And this week, look at this. This week, it has basically formed a hammer. So we can say it might be, because it's also spike down, It might be a bullish week. So let's see if we could find entries here. So in this point, it was totally reverse candle, hammer. Is it above 40? Yes. Is it below 60? Yes. Is it touching a lower Bollinger Band? Yes. Here, look, 80 pips pull. So guys, this is how the system should be worked. I told you this isn't a very easy system to get a grasp, but if you want, if you want to use it, then you can, I need to have at least, I don't know, 20, 30, 40 people which are interested in this kind of method, so I can do another session with you to explain maybe some misunderstanding, because this is the most advanced systems, but it's not very easy to trade, as I showed you. It's not very easy to trade. Yeah, I know many of you probably are interested, but Darshan, if you're the only, I would like to see if there are more interested people, but I think it might be so. I think I can schedule it in maybe, because my schedule is full now. I am full now. I have already scheduled May and April webinars, so it may be in June if you are interested. Yes, this system is really good, but it takes some time to get used to, really. Let's see another example. Let's see how does it behave compared to other currency pairs. Let's see New Zealand dollar. Let's see weekly. Okay, this week here is uptrend. Okay. Can we bribe you with Strutli and Burek? It's easy for me. I don't have any problems with giving you another showcase of this great system. But still, because all of the time is full, I don't know if I can change. If I'm able to change the time of the webinar or reschedule it, we may have it maybe next month. So let's see if I can do that. I will talk with other markets management. So if not, then we need to wait for June. Well, but look at this. Let's see this example. This is, let's see this. We don't know where this next candle will go, but assuming from this candlestick, look at this. This is a higher high, and this candle has a higher low. This candle has a higher high, and this candle has a higher low. And next week we assumed it will be bullish. Let's see. So bullish, we want a pullback. Here the price has already pulled back, but only here it made, here and here it made reversal patterns. Okay, and this was the best place to go because it's a sort of piercing line here. You see, piercing line. You see the stochastics very close to 20, and you see the RSI is in normal mode. So in this particular area, you could have longed, and you see that this system needs time to place entries, but essentially this is a swing system, and you need to be patient with it. You need to leave the trade going. You see here, basically from this point also it started to go up, and finally it went up for 100 and more points, but you see it was very reluctant to do so. This is strong, but we didn't. Let's see what rules for strong trend say. Strong trends. RSI is above 60. Okay, we know that already. But also the price is touching or beyond 100-hour Bollinger, touching or very close to 100-hour moving average. And occasionally the 200 moving average. Look at this. All the rules have been met. So this also was a chance to go long because the price has indeed made a bullish candlestick, bullish Marubozu candlestick. Here the price was very close, and also look at this, basically RSI started to go above 60. So at this point it went 50, 60 pips also to the upside. Here another swing trade possible. Here this is also reversal pattern. Look at this. Harami. Look at Harami here. Close to 20. Normal mode. This is 100. Well, not for a normal mode. 100 is not so good. But let's see this. This was a filter. You see, a filter. Because RSI went below 40. You don't take long trades when RSI is below 40. So couple of good trades and couple of filter trades for New Zealand dollar. Okay? So guys, this is what I wanted to show you. I will try to make additional session just for making examples for this system, again explaining the rules. I will re-summarize it, but please, if you're interested in this system, this webinar will be uploaded, and I would like you to send me an email that you are interested in another session for this system, okay? And I will show that to Admiral Markets marketing staff, and then maybe we can reschedule it also maybe in some of our next session in this month. So use my mail, tarantula@gmail.com, and tell me that you are interested in pattern system for another session, because I know that it takes time to get a grasp on. It's not so easy. Has the Monday special webinar been uploaded? Darshan, you need to contact Admiral Market Support and tell them that you want to see a webinar because you haven't been able to attend it, and they will give you the link, because special webinars do not upload it because other people who are not Admiral Markets clients can use it. And those premium webinars are only for our Admiral Market traders. So ask Admiral Markets, give them your account number, and ask them to send you a link to the video, and they will send you the link. So for all of you who want to see again, or who maybe weren't able to see our special premium webinar, ask Admiral Markets to show you and to give you the link, and they will do that. Also, guys, when we talk about it, a next premium webinar, it will be soon. There will be a banner telling you to sign in. I will make next special webinar on 27th of April, and that webinar will be named ATR Stop. I don't know if they have scheduled it. Let me see. I will give you that indicator which I've been using 5 years, and it was really, this is the webinar. Sign up for this webinar. ATR Stop Pro indicator. I will give you, you cannot find this indicator anywhere on the net. It's the best one for ATR stops. It's the best indicator for using ATRs in ADRs. It also prints support and resistance levels based on this. And it's only reserved for our, of course, Admiral Market clients. Okay? So sign up for this webinar, and after the webinar, you will be given this indicator. And I tell you again, you cannot find it. You cannot find it anywhere on the net, this indicator. Now, okay? For 5 years, it has been the best indicator made. 8-year stop. And these premium webinars will always give you some kind of secrets and some kind of indicators which cannot be found anymore and which are great. When shall we talk about trailing stops? As promised, we will. I will have a webinar, namely expert advisors, and on that expert advisor webinar, I will give you. Let me see if I can find it. I will give you the EA for trading stop. Here, this is the first expert advisors part 1, and on expert advisor part 2, you will be given EA for trailing stops. Okay. So this is my email, tarantula@fx@gmail.com, and just send me an email that you want to have a price action webinar for another session, and I will show them. Also, I have contacted AM in Ljubljana. They will send me the link for the webinar. Excellent. Excellent. So guys, just if you missed premium webinars, just send the link to EM on Facebook or support, and they will send you the link. Okay. So Darshan, that's it. Premium webinars for members, you will get this indicator, and also, of course, you will be given the link for a previous webinar concerning. It was about MetaTrader 625 and MACD 2-line indicator. Oh, great. So guys, we can finish with this webinar today. As I told you, I'm willing to do one more session to show you examples of great trades of this system. And if you're interested, send me an email. I will show that, so we maybe can have a webinar this month. I will try to do that. Thank you very much for attending, and talk to you very, very soon, guys. Cheers, and have many cream pips.